Good morning, good morning, good morning. Welcome to today's Morning Blast, your sweary morning preview and review of the markets with myself and Mr. Michael Brown. As usual, review of yesterday, preview of today, etc., etc. Probably a couple of foul-mouthed tirades, stuff that's pissing us off. But before we get any further, I will get the legals out of the way. Nothing discussed on Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. How are you, Michael?
Well, very good morning to you, Ryan. Good morning, everyone. I was doing okay this morning until about 90 minutes ago.
Shall we start there?
Well, we may as well. I mean, there's about a million different places that we could start this morning, but yeah, why don't we crack on with those latest UK inflation figures, which were, I'm assuming that, are you hungover, or is that your sort of visual representation of what the data looks like?
Mate, I don't drink midweek, you know me.
Oh, yeah.
Stop with the laughing. Shush, this is a professional show.
Anyway, setting aside Ryan's slight alcoholism, in terms of the data
Quite
that
fun.
we in terms of the data that we had a little over an hour ago, headline CPI rising by 3.6% on an annual basis here in the UK in the month of June. That was above not only the BOE's forecast for a 3.4% increase, but it was also the highest or fastest annual inflation rate since the beginning of last year. The details of the report were pretty grim as well when you look at some of the underlying price metrics. Core CPI, that rose by 3.7% on an annual basis, well above the 3.5% consensus and prior figure. And the services metric, which of course we watch very closely as a gauge of underlying inflation and persistent price pressures, that rose by 4.7% on the year, unchanged from the pace seen in May, and above the BOE's forecast of 4.6%. So all pretty grim. Not only is the inflation data worse than expected, it's also pointing to a re-acceleration in price pressures. Many, including myself, have been expecting, given the degree of labour market slack that we're seeing open up, that the BOE would make a slightly more dovish turn at the August meeting. That is probably off the cards at this point. I don't think that the latest round of economic projections is going to enable them to adopt a faster pace of interest rate cuts, given the inflation figures that we've had this morning. And frankly, this all just leaves the UK economy in a bit of a mess, really. We've got inflation moving in completely the wrong direction, a labour market that has shed jobs in each of the last 7 months, and we get the latest employment figures tomorrow. The economy, of course, has contracted for 2 months in a row, in both April and unexpectedly in May. And then, of course, you've got the ongoing, frankly shambolic fiscal situation with Chancellor Rachel Reeves having frankly no idea what she's doing whatsoever. We're going to breach the fiscal rules again, probably need to raise 20 billion quid's worth of headroom. Do you do it through tax hikes? Well, actually, some of Rachel Reeves' policies, the changes to employer national insurance contributions and the tweaks to the minimum wage, that has caused the labour market weakness that we've seen and the inflationary impulse that we've seen. So you could argue that policymakers here in the UK were sort of stuck between a rock and a hard place before the data this morning. I think that rock has just got rockier and the hard place has just got harder.
Well, this is the thing, and let's not beat about the bush. We're not known for doing that on this show. In my opinion, in my humble opinion, we're completely fucked at the moment.
Well, we are actually.
And this is with we've basically been told in the autumn expect some serious tax hikes. Great. So we haven't even been told, oh, don't worry, fields of wheat are coming. It's all going to be gravy. We've already been told it's going to get far worse. So basically, get out while you can. Basically, save yourselves. Save yourselves.
Yeah. I mean,
It's
I've
just
been.
fucking appalling. What another thing that's made me laugh is like Rachel Reeves. We know she's massively out of her depth. She has no fucking clue what she's doing. She's like, the writing was on the wall when she's gone to regulators for inspiration to increase growth. It's not what you do. But what I love is April's figures when we came out. when it was April's figures were expected to come in slightly less than expected anyway, and all this. We knew that this was before she made her decisions and such, and before they became kind of before they actually worked their way through into the system. Within 20 minutes of the UK inflation data coming out, she was on the Twitter, inflation falling for 2 months in a row, wages growing faster than prices, blah 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 blah. Every one of us said at the time, this will not age well. We know what's coming. You giving it the big one after a figure like this will not age well. And as we went on air, nothing. Absolute
Yeah, I was
tumbleweed.
going to say, I assume we haven't heard from her this morning.
No, of course not. Well, she's probably still trying to work out what CPI stands for. Dozy
Well,
bat.
no, ex-Bank of England economist, mate. She's on the ball, don't worry.
Yeah, chess champion as well. Yeah, fucking. I tell you
Yeah.
what, I reckon my 3-year-old cousin could fucking beat her at Snakes and Ladders. A dozy bitch. Moving
Jesus.
on. I hope you're
Um,
listening. Rachel. You've
I
ruined
hope
us.
she is as well.
Fucking.
There is one last point I would make on this, because obviously spent quite a lot of time, thinking about the UK economy. It's what I'm paid for ultimately. I struggle. I would hasten to add, not by you. I
Mate,
just,
I'm not paid by me. Mate, that makes two of us.
I increasingly am just struggling to see a way out of this, because
Yeah, so am I.
we've
I'm,
got
I'm genuinely scared.
the Bank of England can't ride to the rescue with interest rate cuts, because inflation is not only too high, it's also moving in the wrong direction, which I think is the more important issue. If you've got 3% inflation, but you're forecasting it to come down down to 2, then you can justify a cut. If you're actually forecasting it to come lower and it keeps moving higher, then there's no room to lower rates. And then on the fiscal side of things, the government need to balance the books. They need to get the fiscal house in order. They can't deliver spending cuts because their own MPs simply won't vote for them, because
Well, this is
they don't
it.
understand the fiscal reality. They can try and go down the path of tax hikes, but the tax hikes that would be needed to sort of plug the hole effectively, um, you can't pull one of the big levers, income tax or VAT or national insurance, because they've ruled it out in the manifesto. You
Yeah,
can.
but still, I honestly, I wouldn't hold it. I wouldn't give that any
I think they'll have to go
credence.
down that path at this point.
Well,
But
yeah,
the
exactly.
bigger issue with that is, no matter whether you do one of the big tax rises or a load of nonsense fiddling around the edges, whatever you do, we're at a point, I think, where tax hikes are becoming counterproductive, as we've
Oh,
seen
absolutely.
with the national insurance changes, where fine, the OBR will say you'll raise 15 yards in terms of revenue, whatever the number was, but actually all you're going to do is harm employment. If you increase income
Yeah,
taxes or
absolutely.
VAT, all you're going to do is see consumers tighten their belts and pull back in terms of
But
spending and consumption.
the thing is, this not beat around the bush here. Like, the national insurance contributions being leveraged onto employers, that's fucked the employment outlook,
Mm.
especially for hospitality. It's also pushed up prices, which is fucking inflation. Now, yeah, one easy thing for her to do would be to roll that back. Right? If she rolled that back, hiring's going to go up, prices are going to go down.
Mhm.
That's a certainty. But they're too fucking thick to work that out. And as much as I love going on about the French, and the French are in a real sticky point at the moment. They're going to have to remove a couple of bank holidays. They're doing all this. They're doing that. There's going to be a massive uproar in France. There's going to be civil unrest in France before that goes ahead. Let's be honest. But we're not that far behind the French. And
No,
I fucking hate the French. No offense, French people. I don't hate you personally, but I just hate your government and your system. Not you per se. You do some fine wine, and some decent cheese, to be fair.
not much else,
But
but
yeah,
those two things.
no, not much else. But white tablecloths also used as flags. Apparently, they're really high quality stuff. But we'd sit here and take the piss out of their economy and their political kind of sounding, and we were not much better. And
Mm.
that is a really scary place to be. But I feel like we've gone on about this maybe a little bit too. I think this could be its own show. But anyway, what else
Yeah,
is
I think
going
it could
on?
be. I mean, I'm glad you brought up the French, because it saves me mentioning that in a minute. But I was joking yesterday that the French have sacked off 2 bank holidays to balance the books. We'd need to just cancel like every weekend at this point, I think.
I wouldn't know what a weekend is, mate.
Oh well, every day's a weekend for you, isn't it?
Well, or a Friday. Right, moving on.
Yeah, we've probably done the UK to death until until we get the latest jobs numbers tomorrow, and we have the same conversation all over again, frankly. But there was, I should say, plenty else going on in financial markets yesterday. We may as well stick with inflation firstly, because we had the latest CPI figures out of the US yesterday, where we started to see the first signs of tariffs beginning to show up in the data. Headline inflation rose by 0.3% on the month and by 2.7% on the year, the latter figure being a touch hotter than markets had anticipated, while core inflation, that rose by 0.2% on the month and by 2.9% on the year. The super core inflation metric, which is core services inflation when you take out housing costs, I appreciate that sounds fancy, but the Fed look at it. That rose by 3% on the year, up from the prior 2.9%. What I would argue is more important than that, though, is actually to split the inflation basket out into goods and services. The reason why that's important is because, of course, thus far, it's only goods prices that have been, or goods, I should say, that have had tariffs imposed on them. And core goods prices rose by 0.7% on a year-on-year basis in June. Doesn't sound like a lot, but it is the fastest rate in getting on for 2 years. And actually, core goods prices have been in outright deflation, not only for most of the last 12 months, but also for the majority of the sort of pre-COVID period as well. So I think that's something worth bearing in mind, and we would obviously expect core goods prices to continue to rise and thus CPI to continue to rise over the next couple of months as inventories continue to get drawn down and the full effect of those tariffs is passed on to consumers. Of course, that inflation number pretty much, if it wasn't already dead, kills dead the chances of a July Fed cut, although it will, of course, be interesting to see whether Governors Bowman and or Waller dissent favour of such a move in what would be quite a politically motivated vote. Nevertheless, markets sort of shrugged off the inflation numbers relatively easily. Equities were pretty much flat on the day, some very marginal downside in the S&P 500, but it took us back to where we closed on Monday, so it's hardly worth writing home about. The moves were a little bit more pronounced elsewhere, where we saw some significant selling pressure across the Treasury curve, the 30-year yield rising back north of 5% once more, and the 10-year yield testing 4.5% to the upside, with that in turn putting a bit of a bid into the dollar, with the dollar index up by around about 0.5%, trading towards but couldn't break above the 99 figure, with pretty much all other G10s facing headwinds as the euro slipped beneath 116, although it has reclaimed that level this morning. Cable dipping below 134 and dollar yen trading north of 149 for the first time since early May. In terms of other bits and bobs from yesterday, quite a lot on the trade front, as we've all come to expect. We now have 3 US trade deals, with the United States yesterday agreeing a deal with Indonesia. President Trump saying that Indonesia will pay a 19% tariff on goods that they send to the United States, and that the US will pay a 0% tariff on goods that they send to Indonesia. There were various other commitments involved with this deal, including Indonesia agreeing to purchase up to 50 Boeing aeroplanes, as well as $15 billion worth of US energy and $4.5 billion worth of US agricultural products. Bear in mind that this does feel very much like taco in action. If you think back to the letters that were sent last week, literally this time last week, the letter said that Indonesia would be paying a tariff of 32% from the 1st of August. They've now settled on a 19% levy, really evidencing this escalate to de-escalate strategy that we've been talking about quite a lot. The other thing that I would say in terms of this deal is it does kind of increasingly look like this 20-ish% mark is something of a ceiling in terms of tariffs. Now, I know it's sort of n equals 3 when it comes to trade deals, so it's a very limited sample size, but if you look at where both Vietnam and Indonesia ended up, it does look like this kind of 20% region is maybe as far, or as high, I should say, as the Trump administration want to go on that front. We also heard more on tariffs yesterday, Trump saying that a letter will soon be released telling, quote, small nations what tariffs they will have to be paid, and that blanket tariff tariff is likely to be over 10%. Bit of a kick in the teeth if you just get a letter addressed to all of the small nations, but there we are, I suppose. Trump was also talking about sectoral tariffs yesterday, noting that pharmaceutical tariffs will, quote, probably come at the end of the month. Time is getting a bit tight on that one, and that they will start off at a low level. Trump was also saying that the timeline for tariffs on chips and semiconductors is likely to be similar to that on pharmaceuticals, noting that the tariffs on those products will be less complex than those imposed on pharma. We may as well stick with Trump because, of course, he was talking about the Fed again yesterday. Apparently, consumer prices are low. Not entirely sure what CPI report he was looking at, but nonetheless, he was saying that we should bring down the Fed rate now and that the Fed should cut rates by 3 points. Very much a reiteration of recent rhetoric, if something that looks rather stupid in the context of the data that we had yesterday. In terms of other catalysts, obviously earnings season got underway yesterday with the banks kicking things off. JP Morgan and Citi both delivering top and bottom line beats with their earnings underpinned by solid trading revenues, unsurprisingly as a result of the market volatility that we saw in the second quarter, particularly around Liberation Day in early April. Results from Wells Fargo, though, were a little bit soft, with net interest income missing expectations, and also the bank guiding towards some softness in that line going forwards. Moving on from that into the AI space, AMD, they are apparently going to resume shipments of the MI308 chip to China once the US, well, exactly, once the US Commerce Department has reviewed and approved some licenses for it. Of course, that comes after news that Nvidia is going to be resuming exports of its H20 chip to China, and that came, of course, at the start of play yesterday. Sticking with the AI space, apparently Trump officials are preparing to release an AI action plan later this month on the 23rd of July, and that this will outline the US's AI priorities, with Trump giving a speech asserting the US's edge in the sector. Good for them, I suppose. Tesla, they seem to be charging up. Nikkei reporting yesterday that they're going to double the number of retail outlets that they have in Japan by the end of next year. What else have I got? Eurozone data, German ZEW surveys beating expectations yesterday. The expectations metric rising to 52.7, up from a prior 47.5, so not too bad there. Inflation in Canada, relatively contained at 1.9% on an annual basis in June, bang in line with market expectations. And lastly, Cantor Fitzgerald, apparently they're nearing a $4 billion tie-up with a Bitcoin pioneer called Adam Back. Apparently the SPAC that they've formed to do this is in talks to buy over $3 billion in Bitcoin in what would be Cantor's second deal of that ilk in a couple of months. So I guess if anyone was wondering why the Commerce Secretary is so pro-crypto at the moment, there's your answer.
And I'm sure Cam will be giving us a bit more information on that at 1 o'clock UK time for the Crypto Blast. There you go. What a lovely little plug there. Michael, thank you very much for that. So as is usual, I will break up Michael with some headlines from the Overnight News Roundup, courtesy of Zach Eisman. Do give him a follow. Do definitely follow, subscribe. Our Substack is the best way to get your overnight news headlines. But starting off in trade, obviously Michael's covered a little bit, but US President Trump said letters notifying smaller countries of US tariff rates would go out soon. Everyone loves a letter, so those penguins must be waiting on that little barren rock. Adding that this administration would likely set a tariff of a little over 10% for those countries. Trump predicted that he could strike 2 or 3 trade deals with countries before implementing his so-called reciprocal tariffs before they are implemented on August the 1st. I think that's what everyone's expecting, probably a buy or a free, saying that an agreement with India was among the most likely. Trump said he was likely to impose tariffs on pharmaceuticals as soon as the end of the month, and levies on semiconductors could come as soon as well, suggesting that those import taxes could hit alongside broader reciprocal tariffs on that August the 1st deadline. Nvidia CEO Jensen Huang anticipates getting the first batch of US licenses to export the H20 chip to China soon, as Michael was just saying. Although, let's be honest, Washington hasn't yet granted export permission. So at the moment, all fart, no poo from the White House. Not the first time.
Nor the last,
stink in there. Yeah. Lutnick He's saying that the easing of Nvidia's AI exports linked to the China deal. So obviously there's been some deals struck in the back offices there. USTR's Greer said he had launched an investigation into Brazil's unfair trading practices a week after Trump threatened a 50% tariff on the imports from Latin America's largest economy. Again, this does feel very much like it's politically motivated. Trump literally came out and said the only reason that they've got a 50% tariff on Brazil is because he doesn't like how Bolsonaro, the ex-president, was treated and like his mate. So seeing USTR's Greer now going after them, it stinks of Trump
Oh,
saying, look, let's see what we can do to fuck them up.
you're absolutely right
Go
on that
on.
one. Although I did see a line from Trump yesterday that said, Bolsonaro isn't my friend, he's just someone I know.
He ain't heavy. He's my brother.
God,
Yeah,
thanks
cool.
for that.
Okay, whatever you want to say. Yeah, and the Epstein files don't exist. Okay, yeah, good one. Moving
Well,
on,
no.
moving on. Look, I was not on the island. Michael, he's going to have to tell you for himself. I'm not going to put words in his mouth. We'll just assume he wasn't. Macro news. Kevin Hassett, one of President Donald Trump's longest serving economic aides, is the early front runner to replace Jerome Powell. We said about this yesterday, but Bloomberg now picking up on it as well. So worth flagging. Treasury Secretary Scott Bessent, Trump said that he could be a candidate as well as Hassett. So, but as again we said yesterday, the markets will not like that because they will want someone that's actually, has a fucking clue what they're doing in the Fed offices. Fed's Logan said the bank will probably need to leave rates where they are for a while longer to ensure inflation stays low in the face of upward pressure from administration's tariffs. It's also possible, she said, that some combination of softer inflation and weakening labour market will call for lower rates fairly soon. So bit of thanks for that. Trump stepped in to broker an agreement between Republican lawmakers after a snag cast out on the fate of the long-awaited crypto legislation that would mark a major victory for digital asset sector. From what I gather, and I'm sure Cam will correct me later on if I'm wrong, the issue that people have had is that it didn't contain a line that banned central bank digital currencies, which is what some of them were asking. And the thinking behind this, I believe, is that if central banks can create their own digital currencies, it kind of removes such a need for stable coins and stuff like that, which could be a bit of a downward pressure on the crypto and the stablecoin space. But I'm happy to be proven wrong. I'm sure Cam will tell me later on at 1 o'clock. So tune in for me to get
I'm
my
certainly
ass.
not going to prove you wrong.
Okay, well, I appreciate that. What else have we got? President Trump is expected to sign an executive order in the coming days designed to help private market investments more available to the US retirement plans, according to the Wall Street Journal sources. Global oil inventories, they have swollen at a rapid clip in recent months, but given the bulk of the increases have been in the Asia Pacific, prices have been able to hold their ground for now. That's according to Morgan Stanley. UK inflation unexpectedly rose. We know that. I'm not going to go over that because I'll get angry again. Reeves, you can fuck off. Geopolitical news. The US is planning to build a boat maintenance facility at a Philippine naval detachment near the disputed South China Sea. Why I've read this out? Because we know the South China Sea is a hot topic. We know that China and the Philippines are always having to go at each other there. So the US coming in and clearly helping the Philippines be more active in the area is something to be of note. Equities. We had the Nvidia CEO in Beijing speaking, praising China's generative AI models. Models like, I quote, models like DeepSeek, Alibaba, Tencent, Minimax, and Baidu Ernie are world class.
Yeah, all the ones that
Developed here.
feed data back to the government, probably.
Yeah, developed here and shared openly, have spurred AI developments worldwide. So someone's definitely fishing for some business from the Chinese government. I noticed no word on Pony AI. I guess he just forgot that one for a second. Yeah, we can live in hope. ASML, the chip giant, reported second quarter earnings that beat estimates with its key net bookings figure ahead of consensus. However, it did narrow its financial targets for the year amid increasing uncertainty amid tariffs, as is everyone. They also did warn that it couldn't guarantee 2026 would be a growth year, so want to keep an eye on there. Everyone's favourite tech investor, Massa Son and Sam Altman sees no end to AI demand and scaling. Of course, they're going to say that because they're both out there looking for money for exactly that. Huawei Technologies, they took the top spot in China's smartphone market for the first time in more than 4 years, according to IDC data. Comeback, everyone loves a good comeback story, fueled by new designs and software that appeal to users in a slowing market. And finally, for me, before I go back to you, Rio Tinto, the mining giant, they've reported the highest second quarter output from its Australian iron ore mine since 2018, while flagging some around $300 million of gross cost cuts. That's from US tariffs and its Canadian aluminium exports. And that's it for me. Back to you in the studio.
Dear. Good stuff. Thank you, Ryan. Where are we today then? Well, of course, we've already had the inflation figures out of the UK this morning. The remainder of the docket
Have
in
we?
terms of, well, yeah, sadly, the remainder of the docket in terms of the European session is relatively empty, to be completely honest with you. But we do have a few orders of business to get through stateside this afternoon at 1:30 London time. We have the latest PPI figures, where producer prices are seen having risen by 2.5% on an annual basis in June compared to the 3% rise that we saw in May. Not necessarily a market mover in itself, but of course the PPI figure is used as a key input into forecasting models for the PCE print that we get towards the end of the month, and that is of course the Fed's preferred inflation metric. Also this afternoon at 2:15 London time, we have the latest US industrial production data. Production seen having risen by 0.1% on a month-on-month basis in June, compared to the 0.2% decline that we saw in May. Other bits and bobs in terms of policy from the Fed today, we're due to hear from Barkin, Barr, Hamack and Williams, while the Fed will also release their beige book of anecdotal economic evidence. And earnings today, earnings season continuing on Wall Street with some of the major banks reporting before the market open. Earnings coming from the likes of Bank of America, Goldman Sachs and Morgan Stanley. And then after the market close, we hear from United Airlines, and of course we wait to see whether they will take off or hit some turbulence in after hours trade.
Double tap. You finished
And
on that one, right?
I'll finish on a high, don't worry.
Okay. Well, before Michael crashes, I will say goodbye. Thank you as always. Apologies for the rant to begin with, but I just needed to get that off my chest. Rachel, if you're listening, go jump in the Thames. Whatever you're doing, whatever you're doing today, stay safe, keep it tight, try and stay out of trouble. Go and have a nice cold pint if I was you. And we'll see you all tomorrow. Much love.
Bye for now.